Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is being a diversified trader. Understanding two things. One, how to trade in all market conditions and all market environments. Understanding the different stages of the market, stage 1, 2, 3, 4, the market's basic atom, as well as understanding that not every type of trading or every style of trading will be immensely profitable in all markets. So therefore, you need to diversify your trading. So not just trade, for example, scalp trade 5-minute charts on stocks. Well, maybe you should also swing trade stocks and core trade stocks. Also, look at Forex, look at options and credit spreads and crypto and even futures and E-minis. Start dabbling in those types of things. You want to grow your toolbox so that there's never a month of the year that you're doing terribly. Because if we're being honest here, not every style is just going to crush it in every market. So let's say, for example, you scalp stocks on a 5-minute chart, 15-minute chart. Well, the market's been very volatile lately, and it's been very challenging to get some follow through. However, options have been a little bit of a better choice, credit spreads, etc., and so forth. Even some of the longer term trades when you're using weekly charts and monthly charts. So that will help get through some of this volatility. My point simply is that you're not likely going to have every style of trading cranking on all 12 cylinders all of the time, okay? But if you have a variety of different types of trades that you take, all right, there's always going to be one or two that are doing really well and maybe one that's lagging a little bit. So it's kind of diversifying your portfolio, so to speak, so that you're always making that level of income that you want to make every month no matter what. Because if you're relying on just one style of trading on one time frame, you're going to have a bit of a roller coaster ride throughout the year in terms of your income. If you really want to leave that job that you've had and you really don't like your boss, relying on just one aspect or one avenue of trading is going to be a challenging thing because you're going to continue to go through that roller coaster ride. So this way, by diversifying not only the types of trades that you take, also the time frames of the trades that you take, you should be able to keep a more consistent P&L so that you can leave that job and you don't have to deal with your boss, and things are going to be just generally better for you, a more consistent approach to trading. It will also help you personally, right? Less stress, less ups and downs, because I'm sure a lot of you out there, when you've had a bad trading day, you're like, oh, I don't feel very good. I don't want to talk to anybody. When you have a great trading day, you're like, oh, I want to go run a marathon. You want to stay more even-keeled. And by getting your trading to a more consistent level with different approaches and more diversity, you'll be able to do that. So if you like these videos, guys, please click the like button, hammer the subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is the many ways to earn money as a trader. I think, especially around here, sometimes people think that there is only one way to make money as a trader. And they think, oh, I have to do stocks, or I have to only go long trading stocks. But they're not recognizing or realizing that there's a lot of other avenues, whether it's Forex or credit spreads or other types of options, you know, crypto, Bitcoin, whatever. There is a lot, or there are a lot of ways that you can make money as a trader. And the reason this lecture today is going to be good and powerful is because you'll note that there are certain environments where one style of trading does better than other styles. Like sometimes you trade for income with short-term trading, like scalping or intraday trading, and then you have swing trading and core trading for your wealth building. And there are times when your wealth building's not doing so well, and there are times when your intraday trading's not doing well, and sometimes when stocks aren't good, and sometimes when options are better, etc., and so forth. So the ultimate goal to be able to get through all market environments is to be a well-rounded trader who has a lot of different tools in their toolbox, so that you're never suffering. Because if your goal ultimately is to be a self-directed trader and not have a boss and flip your finger to the world and say, hey, I'm just going to trade, well, then you need to make money consistently every month, right? So if you don't have an avenue to make money because maybe your one style that you're used to isn't working so well, what are you going to do? Right? Let's say you're a scalper and that just isn't working so well. What are you going to do? You're going to go, work for Uber for that month? No, you have to find a way to balance everything out. So that's what we're going to talk about today. We're going to use some technical charts. We're going to talk about technical trading as well, how the market works, et cetera, and so forth, as well as the different vehicles, different avenues of trading and why they can be very valuable. But before we do that, first, we must talk about when will the insanity stop? I do this segment every week, and most of the time I choose some crazy trader out there who has done something extremely foolish, YOLO, diamond hands it, something like that. And I do that mainly so that you guys can learn from other people's mistakes without making the same mistakes yourself. Yes, you heard me. So that you can watch other people do stupid stuff so you won't have to. It's invaluable, okay? But most of the time you're going to have to probably do it yourself because that's what makes trading so hard, okay? But you never want to be focused or featured on when will the insanity stop, unless it's this week, because I've put a little twister here for you guys. This week's is a good one. It's a positive email or social media comment that someone sent. So it's a little bit of a pat on the back for myself as I go through this. First milestone reached. A big shout out and thanks to Jared Wesley at Live Traders and my followers, friends at places like blah, blah, who cares. All right. So this is a person who turned $26,000 into over $100,000 in a year using Live Traders Risk Managed. That's pretty impressive. That's a 400% return on your money, right? So this is something, again, I usually go over somebody doing something really, really wrong. But this time I thought, you know what? I got a lot of people commenting a few weeks, a month ago, I did more of a positive version of this. And a lot of people are like, I like that change up for a minute there, Jared. I guess sometimes people get tired of the negativity, so I thought it would be good to throw into positivity. No, it's not Jordan C. Braden, but he has done extremely well. His equity curve is impressive, Braden, if you see Jordan's equity curve. But anyway, this is a very nice year. For somebody. They started their account with $6,000 and then they added $20,000 to it so they can get past the PDT rule, right? So $26,000. And from June to June, right? 2020 June, 2021 June, up over $100,000 in profits. First milestone reach, their goal, $250,000. So I have to get back in touch with this person and see if they hit their goal ultimately. But either way, well done. But one of the things I want you guys to notice here, and you're going to see this a little bit later on when we look at Unmol and some other people's, we're going to take a look at some P&Ls today as well, is note how the curve works here. Do you guys notice this just doesn't go straight to the moon? It's not like the Tesla chart from a year ago, right? Notice it goes up, kind of chops around for a little bit, goes up, pulls back a little bit, chops around, pulls back, then consistently goes up for 2-3 months and kind of goes sideways and then goes up. Guys, that's trading, right? Your equity curve looks like an uptrending stock, right? An uptrending stock has higher highs and higher lows, but what it also has is pullbacks. Right? You'll see green bar, green bar, green bar, green bar, then maybe a couple red bars, then green bar, then a couple red bars. And then every once in a while, what happens? Okay? You get a little bit of a mini climactic move, right? It happens to all of us. You get in, and that's kind of what happened to this person right here. They got up really nice, and then they gave all of that gain back, and then some. Chopped around and struggled for 2 months. Look at this struggle right here. So from basically October to January, I mean, it took this person, after that mistake, whatever mistakes they made there, it took this person about 3 months to get back to that prior level and then finally push higher. Okay? So my point simply is, this is normal. If you're having a pullback, relax. Don't go crazy. Just chill, okay? But I wanted to put this out there because, yes, there are lots of success stories out there. Lots of success stories. You guys just don't think so because you think if you're struggling, then no one else could possibly be successful. Tell me you've never thought that before. Seriously, tell me. Tell me you've never had that. You thought to yourself, I'm pretty smart. I'm pretty good. I work 12 hours a day at this, and if I can't do it, then nobody can. You're wrong. Plain and simple, you're wrong, okay? There's plenty of people that do really well at this. You just haven't sorted it out just yet, all right? So let's dig in. Reality bites sometimes. We don't live in a perfect market. You're like, geez, Jared, that sounds very familiar. Of course it does. We said something very similar last week. We don't live in perfect markets, right? We live in a world or a market where things are very choppy at times, and sometimes things are very smooth. And we're coming off basically a 10-year run where things were generally very smooth for the most part. So when you sit here and you look at this stuff, right? You see these posted on social media because I'll post them. You see them in professional trading strategies, etc. And you're like, oh my gosh, goodness gracious, wide range bar, narrow bar, rip. What's there not to like about this? Nice pattern, proper market bias, right? Market gaps up, stocks in an uptrend. You get your 4-bar play and you walk away and you're like, here, hold my beer. Shit's easy, right? This is what we'd like to see every time we take a trade or get into a trade. And something like this, right? This is the kind of the result that you want, right? You get a trade, it's gapping up over a red bar. It has all this room back to $14, give or take. You have a wide range bar, a narrow range bar. You get in 1271, your stop's 1250, and it rips, and you make a couple, $3,000 on this trade, right? 2-3 grand. That's nice. That's good. That's what we want. But is that always the reality of it? This is perfect world trading, right? Gaps down under support, wide range red bar, narrow range little green bar here. You short it, 180, stops 182, and oh my gosh, it goes to 168, right? I mean, that's what we want to see, okay? And that's what we do see a good amount of the time, right? And these are all 3-bar plays, but it could be any type of trade, right? But it's not what we always see. So again, we talked about this a little bit last week, but I'm going to combine it. We're going to go a step further this week, a little step deeper. But does volatility have you down? What I find fascinating is you guys don't even know what you want, right? In the middle of August, people are like, I'd sure kill for some volatility right now. Then the market gets crazy extreme volatility, and you're like, I'd sure go for a calmer market right now. Guess what you're asking for? Seriously, think about what you're asking for. You're asking for a perfect market all the time. That's what you're essentially asking for. Yeah, August's a little quiet. It's just there's not enough volatility. I can't make any money because nothing's moving because there's no volatility. Then boom, this happens and you're like, oh, whoa, it's way too much volatility. Oh my gosh, like I'm in a trade long and I flip my finger and it just drops and tanks on me. Uh-huh. Oh, but you don't want that either. You don't want August and you don't want right now. So what? You want that perfect little middle range. Guess what? If you can only make money when the market's in that perfect range, you're not going to make money very often. Because the market doesn't play in that range all that much. That range looks like this over here. Do you see this area right there? Okay, right here. That's that range you're talking about, where the market gaps up, goes higher, gaps up, goes higher, gaps up, goes higher, gaps up. Oh, one little red pullback day. Great. Next day goes up higher. Oh my gosh, a big red day. Up, 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 up. And you guys are all singing Kumbaya. I'm such a great trader. My name's Braden Bledsoe, and I'm a great trader because I can make money when the market goes up every day. And then when the market does this, you're like, oh, fuck. You have to learn to make money in all markets. If you can't, you're not going to be a successful trader. Okay? Because sure, you can sit on your hands, but you're going to sit on your hands from November to the end of February? Seriously, you're going to sit on your hands from Thanksgiving till the end of February. This is 3 full months. You're not going to make a lot of money if you sit out on the sidelines 6 months of the year. So, has your trading suffered because of the volatility? Dow's up 500. 2 hours later, it's down 500 points. Right? It's hard to get follow through. You get follow through and you flip a switch and boom, the follow through is gone. What do? You got to diversify. Right? You have to diversify. Find other avenues, other things to trade, right? Here's a great example of not only other avenues and other things to trade, but an example of changing your approach a little. Not the patterns you take, but maybe be a little more nimble. This is a stock or a trade that really did great, right? But what happens if you're a longer term trader? What happens? You're back to break even by the end of the day. You got in over here and you're maybe a little above water, but you were up 10 to 1 on your money. right? You're up 10 to 1 on your money. So if you didn't take it on the way up, because, you're used to the market going up every day and you're going to hold it as a swing trade. And, let's go back. And you're used to this happening, right? Oh, well, the market will gap up and continue higher tomorrow. And the next day it'll gap up. And even if it pulls back, no big deal, because it won't be a big pullback and I already have so much protection. And then the market will go higher and higher and higher and higher. And you sit there and you're like, yeah, I'm just going to hold that stock. I'm going to turn it into a swing trade. During this, that's pretty tough, isn't it? Because this doesn't last. If you don't take some money on the way up, scalp in, scalp out, whew, right? Whew. Tough sledding. Here's another example. Here's the market that goes up, chops around, goes higher, pulls back. Ooh, nice buy setup on JP Morgan. Goes higher, whoop. What? This is volatility. And most of you don't know what to do with it, right? So you buy the buy setup and you go, Jared, what do you think? And I'll go, hey, it's a pretty nice buy setup, right? You have your lower highs and your lower lows. You're in an area of support. Maybe it's a 50% retracement. Maybe it's a little more bottoming tail. I mean, it's not bad. It's not perfect, but it's pretty good. It's decent. Goes back up. Chop, chop. You're thinking, good. We're about ready to break out over 159 right here. I'm poised to go higher. And then slap. The market says, yeah, no, we're not today. This isn't 2 months ago. This is now. And you don't know how to handle it. So what happens? You lose 12 R in a month. You get hammered. And you do this every day. Come in, slap. Come in, slap. Come in, slap. So a couple things are happening. One, you're only trading one vehicle, stocks. And two, you only have one method of management. Say it's all or nothing, and that's it. So if this period of time or this environment lasts a long time, you're going to be in trouble, right? If it lasts a week or two, so what? That happens. But what if it lasts 3 months like now? What if this is October 2008 to March 2009, which we saw was crazy volatile for those of you who traded the market, 14, 15 years ago? That lasted 6 months. What are you going to do? Not take a paycheck for 6 months? You better get, used to really liking your boss. Got to figure out how you're going to trade this environment. Maybe using different vehicles, maybe changing your management strategy. Okay? So be a well-rounded trader. Learn to trade in all markets. Diversify. Why? There's so many things to trade, right? You have individual stocks you can trade. You have ETFs. You have long-term. You can trade yearly charts, monthly charts, weekly charts, right? Swing and core trade. So you might find the volatility now extreme. So you say, okay, well, I'm going to trade on higher time frames like weekly charts and give them more room so that the volatility probably won't shake me out. Is that a guarantee it won't shake you out? No, but there's a better chance you're not going to get shaken out. You could trade shorter term. You might say, you know what? I used to trade 5 and 15-minute charts, but now I'm just going to scalp 1-minute charts in and out. And I've done more of that. I've moved lower instead of higher. I've moved to a 1 or a 2-minute chart instead of a 2 to a 5-minute chart because I want to just take the 50-cent pops instead of shooting for end-of-the-day hold, because that's what I was doing, right? End-of-the-day hold right now doesn't do so well because end-of-the-day hold ultimately in this market environment does this, right? It looks really good for most of the day, and then all of a sudden the market laughs at you. Here's another example that we just saw, right? End of the day hold looks great for what? An hour and a half. You're like, I'm up 10 grand. And by the end of the day, you're up $1,000. Well, end of the day hold in this environment is not good. Now, again, to be clear, every once in a while you catch it perfect. You short a stock and the market tanks all day. It's down 2% and you get a great runner. But a lot of times you're just getting overlapping volatility. Okay? So end of the day hold is not an environment. This is not an environment for that. So I did the exact opposite. I went super scalp. Take 1R. Why? Because the market's showing and proving to me, you know what? Maybe this is not an environment to hold for huge targets right now. So outside of stocks, you have options, puts, calls, credit spreads. And we'll talk a little bit about each one of these. All right. And with these, you also have short-term options and long-term options, right? You can day trade, intraday trade options. You could swing trade options. There's a lot of different things that you can do. Forex, I don't trade Forex at all, okay? But you have different currency pairs, again, short and long term, okay? Crypto, Bitcoin, Doge, Ethereum, there's tons of them out there. Litecoin, whatever, tons, all right? But the point is there's no reason to be stuck in one avenue, in one lane on the road. Algorand, that Unmol likes, okay? There's no reason to be stuck there, but, here's the one thing that ties them all together. Charts and technicals. All of those vehicles have one thing in common: charts and technical analysis. So if you don't know charts and you don't know technicals, there's not a whole lot that you can do, right? You can't expand your horizon, expand your paradigm, so to speak. Forex uses technicals. Options uses technicals. Crypto, technicals. Stocks, technicals. They all use charts and technicals. And you know what's a good thing? Charts and technicals. Why? Because they take the thought process out of it. It either is or it isn't, right? It either is or it isn't. Let the chart speak to you. Don't put your opinion onto the chart, okay? So last week we talked about the market's basic atom, right? Everything comes and goes with this. So a little quick refresher from last week. Most people only know how to make money in one stage and in one vehicle. One stage, one vehicle. That's stage 2, which is when the market goes up, and stocks. Now, don't get me wrong. There's a lot of people out there that own Bitcoin these days. And if you go on Twitter, oh my gosh, it's like a cult. I'm not saying anything for or against Bitcoin, but it's like Tesla people. Like they're like a special breed. Okay, again, I'm not saying anything for or against it, but they're all in. My point is why do you even have a feeling towards it? Think about what I just said. Why do you even have an emotion towards it? It just is. There's no, oh my gosh, this is amazing, or oh my gosh, this is bad. You just read the chart, and the chart tells you how you should feel. So when the chart is tanking like this and you still are bag holding your Bitcoin, if it's a trade, you should be concerned. If it's a long-term investment and you've apportioned that money off to the side, fine, that's a different conversation. But don't sit here and tell me just because it's Bitcoin, it's okay to bag hold. I'll put you on When Will the Insanity Stop next week. Send me your ridiculous stupidity. I'll put you on there. We've seen people lose hundreds of thousands of dollars in Bitcoin. Hundreds of thousands of dollars. So just because it's Bitcoin doesn't mean you're different. You're not different. Just because it's options doesn't mean you're different. What am I getting at? No matter what vehicle you trade, you need to know where you are on this cycle, and on top of knowing where you are on this cycle, you also need money management. I don't care what it is you trade. Now again, if we're talking about a 20, 30-year hold, we'll have a slightly different conversation, but that's also different money. That's not your trading money, right? But when we talk about trading, you need to know where you are on this cycle, stage 1, stage 2, stage 3, stage 4, and you need to know what your risk management is, your money management, because you are nothing without money management. You are nothing. You're a hacker, you're a gambler without money management. I don't care what your Twitter friends say. I don't care what Reddit says. You can go on Wall Street Bets and YOLO with your buddies. You're idiots on there. They're on there for a reason, because they're broke, right? They're not on there because they're on their yachts. They're on there because it's basically, what is Reddit and Wall Street Bets? Let's be honest. Let's call it what it is. It's emotional support. Am I wrong? It's emotional support. It's for a bunch of people who have done the wrong thing, and now they need other people to tell them they were right and to justify their mistakes. The chart is the chart, man. You don't need Reddit to tell you whether you're in a stage 4 or a stage 2. You don't need Wall Street Bets to let you know, oh yes, this is a stage 3. No, you're on there for emotional support, to let everyone know you done messed up and now you want to feel better about yourself, so you want misery loves company. Stop. Just stop. Okay, it's not what trading is about. It's a systematic way to make money in the markets, and no emotions are allowed. Check them at the door. Put your ego in the closet. Okay? No emotions allowed. The only emotions you care about are the emotions of the chart, not your own. So if the market's in a stage 2, you should be greedy. If the market's in a stage 4, you should be fearful and looking to short. Where are we at right now? We're right here. Right where this circle is exactly where the markets are right now. We've been in a stage 2 uptrend for God knows how long now, 10 plus years. Okay? And now we're starting to see some indecision. The Fed has come out and said, hey, we're not going to prop the market up anymore. We're done that. We've been doing it for the last 2 years to the tune of $2 trillion, and we're going to stop. Oh my gosh, what happened? Everyone went like this. What? Come again? What? Deer in the headlights. You mean you're not going to keep buying $120 billion a month? No, we're not. Shit. I might actually have to do something now. Like a monkey, a clown could have made money in the market in the last 10 years. Guys, you know the market compounded in the last 3 years up 100%. 2019, 2020, 2021. 30%, 18%, 30%. It's 100% compounded. You could be a monkey to make money. You could be a clown to make money in that market. Now you actually have to sort things out, don't you? Well, this is where this comes into play. So if you don't realize we're right here, and you're still going long like we're over here, you have a problem. Let me repeat this because it bears repeating. We are here. If you think we're here, you have a problem. All right? Oh, yes. Tesla's at a great, great value right now. I'm going to back the truck up. No, there's more to come. There's more to come. This doesn't mean that 5 years from now Tesla's bad or whatever stock you're considering. It just means be careful right now. Know where you're at. Okay? So the market will repeat this cycle, but here's the difference. It does it in different time frames, right? We're looking at 1 minute, 5 minute, 15-minute charts, but if you're a swing trader, you're going to be looking at daily, weekly, monthly charts. But here's the thing. It's not just stocks. You can trade the options on Tesla. You can trade the USDCAD, right? My point is the cycle doesn't change. It doesn't matter what you're trading, right? You could be trading pet rocks. One of the analogies I use in professional trading strategies, okay, is how this bell curve works, the market's basic atom, how it works in life, right? How it works in emotions, how it works in relationships, how it works in fashion, right? Fashion is one of the analogies I give quite a bit, right? And I don't want to get off into that because I'll spend another 10 minutes just on this slide, and we have another 15 slides to go, okay? My point is, know where you're at in the bell curve at all times, no matter what you're trading. Now remember, there's a macro curve and a micro curve. Know where you're at on both. See, there are times, I know this is going to sound contradictory, there are times when you are in a macro stage 4, but you can be in a micro stage 2. You're like, what? We don't go straight down, do we? We go down, we bounce. We go down, we bounce. We go down, we bounce, we go down. Just like when we go up, we pull back. We go up, we pull back. We go up, we pull back. Well, during these stage 4 move lower, we're going to have short bounce periods, aren't we? Well, that's a micro stage 2. So if you're scalping something, go ahead, have at it. Scalp for that day. But if you are core trading, you better not be thinking long on that shallow bounce because the macro says you're going lower. Know where you're at all times. Okay? This cycle happens in all time frames, and it happens over and over and over again. All right? The key is knowing where you're at and taking advantage of it. And the key to being a great trader is being able to take advantage of all 4 stages. Most people can only take advantage of this. Going up. The average person doesn't even know you can short the market. What's this? Oh, USDCAD, dollar CAD, FOREX, down trend line break. Guys, if I didn't tell you, all right, this was dollar CAD, you wouldn't know what it is, would you? If I just deleted that right there at the top corner, I blacked that out right there, and I said, hey, this is, I don't know, Home Depot. You wouldn't know the difference. You wouldn't. But we do know it's a trend line break. And honestly, this trend line break is in the wrong spot. The trend line should be here. You never cut through price. So this trend line, whoever drew this purple trend line, you're incorrect. All right, let's draw a proper trend line just so you guys can see. Right? put one right here. All right, a proper trend line is going to be right about there. Let me draw that in just a little bit more. Okay, you can even shorten it to here. Let me make it brighter so you guys can actually see it. Let me use a different color. There. That's a proper trend line break. Okay, right there. So it doesn't matter that this is a Forex chart. Does it matter that this could be Bitcoin? Does it matter that this could be Tesla? No, it doesn't matter. We don't care what it is. And this is why I'm trying to tell you, check your ego and check your emotions at the door. There are no place and no business for it in trading. None. Check it. Trade the chart. And then you don't have to worry about your Reddit friends or your Wall Street Bet friends. You don't have to worry about any of it. Okay? Well, Bitcoin. Somebody sent this to me. Now, does it matter whether you're trading Bitcoin or trading, I don't know, what was one we traded today? CRWD, CrowdStrike Holdings. If you don't have good money management, you don't have good money management. This person lost 50% of their account on this trade. Was it a nice entry? Sure as heck was. It was an ascending triangle, flat top, higher lows, excuse me. Flat top, higher lows. It went higher, they just couldn't stomach the loss. Didn't take their stop loss. Stop loss should be down here where my cursor is, right about there. Should be down there. They didn't take it. They lost 50% of their account. I have an email from this person. I may have even put it in when will the insanity stop years ago. Maybe a year or so. Okay? But again, the last one was $CAD. This one is Bitcoin, right? TIERION, whatever it is. And if you don't have money management, it doesn't much matter what you're trading. You're still going to lose money. Okay? The pattern was fine, but you didn't take your stop loss. So my point, though, is money can be made or lost in anything. In anything. Okay? So money management's really important. Knowing what stage you're in the market is really, really important. Okay? All of those things are key. Here's an example, guys. This Unwall's our options guru around here, all right? This is the options newsletter, all right? This is from last year. So the S&P had a really good year, 27%. I think if you include dividends, it was like 30% last year, something like that. Call it 30. It was 30% last year. That's a hell of a year for the S&P 500. I mean, monster year, right? The market's rarely up more than 30%. Yeah, there are a few times in history it's been up 40 or 50%. A few, literally a few, a handful of times, okay? So a 30% year is pretty darn good. How's 136% then, right? So these are just options trades that Unwall calls and emails out, all right? Just options plays. Why is this important? I'm not saying don't invest in the market. Absolutely invest in the market. You should. You should have a retirement fund or an IRA or 401k or just money that you set aside, putting in a Vanguard mutual fund or some other type of total market fund, fine. We're separating that out, okay? So the point simply is, don't tell me you can't make money in options, you can only make money in stocks. Don't tell me you can only make money in Forex and you can't make money in crypto, whatever. You can make money in anything, okay? Options income alerts, just for this year. These are Unwall's plays, okay? 446.8% gain. No losers so far. Yeah, you got assigned 2 trades, so you're still in those. I think you guys are still in those, all right? So if you did 10 contracts on all these, you'd be up 12 grand. Unwall's actual is right here, the contracts he's taken on these. All right, so you're like, $1,900 isn't much. It's early in the year, and 2, this is a longer term portfolio. If I move down to the day trading alerts, the options day trading alerts, holy shnikes. Unwall's up almost 40 grand, right? And I didn't take a full picture. There's way more trades than this in there, by the way. Okay, this is twice as long as this, all right? My point, though, is if you did 10 contracts on all these, you'd be up about 60 grand. You can see Unwall's actual contracts. Sometimes he does 10, sometimes 100, sometimes 2. He has kind of a certain specific risk level that he's gaining or shooting for. He's pacing just on his options trades, just day trading options. This doesn't include long-term options, doesn't include the swing trading newsletter, doesn't include intraday trading, and doesn't include Algorand, doesn't include any of that other stuff. This is just one vehicle. This is why I tell you to be diversified. He's pacing $227,000 this year. All right. Here's the 10 grand he made on NVIDIA over here. I circled it. Right. It's a nice trade. 227 grand. Now, if you did 10 contracts on every one of these, your pace would be what? Even more significant than that. Okay? Wow. 300 grand, 400 grand, something like that. And that's just swing trading newsletter for options, right? Some of them are intraday options alerts. Some of them are longer term options alerts. Okay, for example, this is what it looks like. I get this same emails everybody gets, all right? We'll be buying 7 FXC June 40 calls at the open. At the open, so you have time. We'll update the sheet on where I actually got filled. That's pretty easy to follow, isn't it? Because it's before the market opens. So you have plenty of time to sort everything out, open up your options chain and go, okay, this is what I need to do. Right? What's cool about it is he gives you an Options 101 webinar with it. Don't get FOMO, right? Fear of missing out strategies, FAQ, and then how to use the options alerts. Like he just walks you through it, hand holds you through it, right? And the results have been tremendous. I mean, my goodness gracious, it's not even the end of February yet. You're up 1,100%, 38 grand. It's crazy. And that's options. How about the swing trading newsletter? Stock trading newsletter last year. Up 84%. And I know Unmall is a little disappointed by this. Okay, and I know it ends in June, guys, but at the end of the year, I think it was 101% Unmall by the end of the year? I don't remember the exact total. I tried to get an updated chart, but I couldn't get it in time, so I apologize. This ends in June, but I should have gotten the full year chart. I just didn't have the time. Point is, S&P's up 3 or 4 times less. So this is stock trading. Stock trading swing newsletter. Swing trading stocks, options, used to be FOREX at times, right? And this is what this looks like, right? Email alert, new trade, buy EXEL, 1970, stop loss 1882, target 2105. Here's some other trades that were called in the past. Buy Ford, 1851, stop loss 1728. Buy MPLN, buy TDC, right? So you get them before they trigger. Most of the time, every once in a while, one will come in a little late. And this is what swing trading looks like. This is stock. So we went to options for a little bit, went to intraday trading. Now we're back to stocks, but swing trading. So here's a trade on Wells Fargo. If I took away the daily, you wouldn't know if this is a 5-minute chart or a daily chart. Right? If I took away the bottom here and you didn't see that, and if I took away the top where it says daily, you wouldn't know. This could be a 1-minute chart for all you know. Right? What's the purpose here? Why am I saying that? The concepts don't change. Reading the chart, knowing where you are in the cycle, stage 1, stage 2, stage 3, that's the most important part of trading. The vehicle in which you choose to trade is secondary to understanding the market cycle. Because it's not just a market cycle, it's a stock cycle. Every stock goes through the same cycle. So this is a great example of a stock, in this case Wells Fargo, that pulls back to some support, bottoming tail change of color bar, narrow body bar, about a 50, 60% retracement, 2 bottoming tails, by the way. You get in at 53.50, your stop's at 51, there's your first target's 2 to 1, right? That's what swing trading looks like. But guess what? It doesn't look any different than intraday trading. You're just using a higher time frame. This is why I'm trying to tell you guys, to expand your horizons isn't that hard. To learn options isn't that hard. To learn day trading to swing trading, to go from 5-minute charts to weekly charts isn't that hard, right? Credit spreads. Guys, I'm a newbie when it comes to options. I've been doing options for about a year now. Unwall's been doing it for 10. Jeff Yates has been doing it for, 15, 20 years, okay? Last year, the credit spread newsletter made 293%. The S&P made 27 to 30%. And this is one that I subscribe to myself. I take these trades, okay? So what are we trying to do in credit spreads? For those who've never heard about credit spreads, we're basically betting on a market to stay above or below a certain area. That's it. That's the basic premise of a credit spread. Say, hey, I don't want it to go above 44.60 or below, 43.50. And if it doesn't, I get paid. Depends if we do a straddle, right, or an iron condor hedge. But it's a very simple process. But what's beautiful about the process, guys, and this is what I'm trying to get at for you guys, is Unmol walks you through this. Jeff Yates walks you through this. Like, you don't have to be a rocket scientist. You get an alert, and it's pretty simple, right? Here's a modified 1 DTE play, okay? Notice it's a 3 DTE. We're getting further away from the market and getting a higher premium. But this time, we're bidding for 10 cents for the target, okay? My point, first, you're thinking, that's gibberish, Jared. It's not. It's not. The support that Jeff gives is unbelievable. So, for example, here's a credit spread trade that I took. Here's the chain down at the bottom, all right? Guys, a year ago, to me, credit spreads, options, and I've been trading a long time, all right? At first, I just never really got in to options, especially credit spreads. I just never really got into it. So a year ago, I said, all right, I want to dip my toe in this, all right? And I was sitting there, and I'm like, Jeff, dude, this is gibberish, man. He goes, yeah, but Jared, you understand the chart. I said, well, what do you mean? He goes, dude, this, I know it looks strange to you. He's explaining this to me. He's like, look, I know it looks strange to you. He goes, but you tell me. I'm not going to tell you what my play is for today, Jared. He goes, you tell me what you think the market's going to do today, tomorrow. So go look at a daily chart. Go look at a 60-minute. I said, I think it's going to go here and maybe pivot right there and pull back. He goes, exactly. He goes, so now you know that information. Let me tell you a little bit about credit spreads. So now you know that, Jared. You don't think the market's going to go past that resistance point, do you? No, I doubt it. He goes, exactly. I don't think it's going to either. So let's place a strike up here in this area, say 46.55 when this, this was, I don't know, a couple months ago, whatever it was, okay? So let's try to get 25-cent premium here at a 46.55 strike. He goes, if the market doesn't go above it, you're going to get paid. If it does, we have a stop loss. I said, wow, that sounds really good. He goes, exactly. Don't be scared of it is what he was saying. He said, sure, there will be a learning curve, but don't be scared of it, because as long as you understand, let's go all the way back, because as long as you understand this, you're okay. Yes, you'll have to learn some nuances. Hey, what's a 25-cent premium? I don't know what that means. Don't worry, I'll explain it to you. But you need to know what stage the market's in, what you think the market's going to do tomorrow or the next day, depending on what your DTE is, okay? 0, 1, 2, 3, whatever, right? If you understand that, you'll be okay. Yes, we got to teach you some nuance about how options work. But understand this, Jared, this slide, understand this, and you can trade anything you want. So I picked up options pretty quickly because I understood what the market was likely to do next, right? We use past price action to predict future price movement. So credit spreads came pretty naturally to me. And obviously I follow Jeff's advice as well. All right? He's very good at this. He's not very good. He's outstanding at it. And his support that he provides is amazing. Okay? So guys, here's an example of someone who trades stocks and options. You guys have seen this before. Andrew Brown, I don't know if he's here with us today in the chat room, but this guy took a $30,000 account and doubled it his second year into trading. 2 years into trading, his second full year into trading options and stocks. And I want you to notice something. The reason I put this on here is note, he did not make money every month. In fact, 3 months out of 12, he lost money. He still made 100%. Do you need to be perfect all the time? No, you don't. You don't need to be perfect all the time. You just need good money management, good trade management, and know where you're at on the market cycle, in the market cycle. It doesn't always have to be perfect. Okay? Again, 3 months out of this year. But note, when he lost, he didn't lose big. He had one kind of bad month there, February. Then here, April, small loss. November is basically break even, but note on the good months. When he's winning big. $5 grand, $3 grand. Guys, this is on a $100 risk. $100 risk, $30,000 account, 100%. Guess what? Now he's at $300 risk, and I think he's up to $500 now, isn't he? I'll have to get his 2021 statement because this is 2020, $100 risk. 2021, he did $300 risk. And 2022, now he's doing $500 risk. And last year, he doubled this. He sent me an email. I should have put the email in here too. He's like, Jared, I'm just doing everything I did in 2020. I'm just doing it with more shares. So if I was taking 500 shares or 300 shares in 2020, now I'm taking 800 shares or 1,000 shares. So my risk is no longer 100 per trade, it's 300 per trade. Now it's 500 per trade. I'm taking everything I learned and I'm just doing it with more shares. How beautiful is that? That you don't have to change your approach. You don't have to learn anything new. You don't have to learn the market basic atom twice or learn it in a different way. You just have to apply more shares or more contracts to it. Isn't it beautiful? Options is the same thing. You go all the way back up here to options and it's like, hey, you want to make more money, take more contracts. But as long as you have money management, you always have to have money management. Same here, Jeff's credit spreads, right? Note, 6 contracts here, 6 contracts here, total of 18 contracts right there. Well, I want to make twice as much money. I'll take 36 contracts instead of 18 contracts. Because there's people making hundreds and hundreds of thousands of dollars in credit spreads every year. Unmol's pacing 230,000 in just intraday options. This is both options and stocks. All right, here's another person. Scalp trading and swing trading, stocks and options. Hello, up 276% in their scalp trades. Okay? Swing trades up almost 100%. That's pretty impressive, right? Across the board. IRA was up 34%. Swing trading was up 98%. Okay? A merged account was up 67%. And scalp intraday day trading was up 276%. Wow. Right? Wow. Oh, there he is. The man, the myth, the legend. Right? Mr. Unmol Singh. $65,000. Note though, this is 1 month, okay? This was January, 1 month. Look, grinding, 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 flat for a couple days. Big, nice move up, grinding, grinding. Oops, got it back. Oops, double bottom retest, rip. Guys, even his P&L curve you can chart, right? Even his P&L curve you can chart. Double bottom retest, bounced off support, rip. $65,000 later, a lot of people would like to make that in a year. That's 1 month. This is a combination of intraday stocks, swing trading stocks, okay, options, and credit spreads. That's pretty good, right? That's pretty damn good. All because of technical analysis. Understanding what stage we are in. If you don't understand the stage, you're not going to be on the right side of the market. And if you are on the right side, you were just lucky. But we don't want to be lucky. We want to be skillful. See, the difference between an experienced trader and a new trader is a new trader wakes up and hopes they're going to make money today. An experienced trader wakes up and expects to make money today. Because they know, hey, there's a chance I could lose, but I expect to make money today because 80% of the time they make money, right? So they understand between all the avenues and vehicles that I use to trade, stocks, options, Forex, crypto, whatever, credit spreads, all that stuff. One of them's going to be doing all right today, or possibly even really well today. And I also know what stage of the market that I'm in, so I know how to handle that stage. I know, for example, right now, we're in that stage 3, stage 4. Well, what is the characteristic of a stage 3, stage 4? Wild, whippy, volatile, and choppy. Well, that doesn't do so well with big targets, does it? Because it's choppy. Well, what have we done? We've switched to more of a scalp approach, right? We've switched to more of a scalp approach. So I'm looking at just getting in, getting out. Whereas maybe 4 or 5 months ago, you wanted to ride the trend, ride the wave up here in October. But now, not so much. Buyers are hard to come by right now. The market is generally very weak most days. Ride the wave, ride the trend, okay? That's what it looks like on the higher time frame. But you can delete daily, and you can add 1 minute, 5 minutes, 60 minute, monthly. Doesn't matter. The pattern's the pattern, the chart's the chart. What you're looking for, bottoming tails, topping tails, support, resistance, volume spikes, it doesn't change. Sure, options, volume spikes, a little different, right? But you can still say, oh my gosh, wow, there's a ton of contracts right there. Somebody's really looking to get into this right here. So it's the same, but a little different. So yes, are there nuances that are different? Sure, but the general gist is the same. So what I'm trying to tell you is, learn the technicals and everything else will come easy to you, except for the mental discipline. That's a topic for another day, right? So the market's always right. This is true for stocks. It's true for options. It's true for Forex. It's always right. Don't fight it. Go with it. Don't go against it, right? It's easier to swim downstream than it is to swim upstream, okay? A rising tide lifts all boats. Swimming against the current is very tiring. It's when people drown, isn't it? Don't do it. Stay away from it. You can do it here or there. There are certain areas and times it's acceptable, but most of the time it's not. Okay? Most traders, you guys saw this last week, most traders lose because they trade against the trend. They're in the wrong stage at the wrong time. There's this misconception, right? That everything has to be perfect all the time. So don't marry your market bias, but you should have one, all right? Intraday, swing trading, trouble reading the market, guess what? Despite everything I just said, erase it for 5 seconds. Everything I just said for the last hour, erase it for 5 seconds. If you're not sure what's going on, like you can't decide or decipher what that atom looks like and what the stock or the option is doing, step back. Step away. Step away from the keyboard. You can't be trusted. If you don't understand it, walk away from it. Maybe paper trade it. Maybe ask a friend. But when in doubt, always stay out. Okay? So if you're trouble reading the markets, stay out. Maybe look for relative strength or relative weakness, but if you can't find any, sit on your hands. True or false, guys? And I think I said this last week. Whether it's options, whether it's stocks, whether it's Forex, whether it's crypto, how many of you have the problem of 1 or 2 or 3 bad days a month ruin your month? How many people have that problem? 1, 2, 3 bad days a month ruin your whole month. You're up 10, 12, 15R, and 3 bad days, now you're up 3R for the month. And you sit there, and every single month at the end of it, you're doing your monthly review, and you're looking, you're like, you know, for the most part, I traded really well this month, except those 2 days. And I lost 6R on those 2 days, 8R on those 2 days. Ugh. It's like winning Monday, Tuesday, Wednesday, Thursday, give it all back Friday. Make a lot of money Monday, you spend the whole rest of the week slowly giving it back. That's the mark of a novice, not a professional. Don't do that, but your ego gets in the way, doesn't it? You take a trade that maybe you shouldn't have taken, you stop out early on it, and then all of a sudden the revenge trading starts to come in. And then you push the button again, push the button again, and push the button again. And all of a sudden, you're like, shoot, I'm going to be on when will the insanity stop? I'm bag holding a crappy stock. I shouldn't be doing this. Okay? Don't. That's where mindfulness comes in. Again, that's for the psychology chapter out of professional trading strategies. Okay? So, guys, at the end of the day, try to stick with the market. And the only way you're going to stick with the market is knowing what the basic atom is and where you are in that market trend, stage 1, 2, 3, 4. I don't care what it is that you're trading, all right? When you stick to that market bias within those 4 stages, your odds of success go up exponentially. When you use multiple time frames and try to get stage-to-stage matches, if you can get a stage 2 uptrend on a 15-minute chart and a stage 2 uptrend on a daily, you're gold. You're probably going to be okay. Right? But the goal, guys, is not just knowing when you can go against the market or with the market, but it's understanding when not to trade, right? Being a professional trader is as much about knowing when not to trade as it is about knowing when to trade. And yes, I put these same slides in last week and this week on purpose because in that time frame, 1 week, some of you didn't do this. Some of you traded against the market and you shouldn't have. Some of you traded when you damn well knew you should have sat on your hands. You knew it. You knew it. and you did it anyway, what's it going to take for you to learn that lesson? How much money do you have to lose to learn that lesson? I don't know. Only you can answer that question. I'm Jared Wesley of Live Traders. I hope you guys learned a little bit about being able to make money in any vehicle that's offered. Forex, stocks, options, credit spreads, crypto, Bitcoin, whatever. Understanding that they all come back to the very same thing, which is the basic market cycle, the atom of the market, stage 1 through 4. And that money management and psychology will ultimately be the things that set you apart from the failed traders. Hope you've learned all those things. I'm Jared Wesley. We'll get back at it again next week.